Good afternoon, everyone, and welcome to Stock Market Today, sponsored by Interactive Brokers. It's Monday, October 7th, and we're live from the Investors Business Daily Studios in Los Angeles. And on today's show, we're going to be taking a look at RH Retailer, popping up above a breakout today, and also Nvidia, which is possibly staging a comeback, along with software name ServiceNow. But first, let's take a look at the major indexes. It's Justin Nielsen along with Ed Carson. And Ed, it looked like a day that was starting to look a little bit more promising, but it didn't end that way. Looks like the composite ended down 0.3%, S&P 500 down almost a full 0.5%, and the Dow Jones Industrial Average down about 0.4%. So that 50-day moving average line is starting to become an issue here, right?
Yeah, I mean, it's been an issue for a while. But, you know, the Dow and S&P got back above their 50-day lines on Friday. The NASDAQ came close. Today, the NASDAQ did intraday get above its 50-day line. That's what we're showing here. Backed off as it closed down. And the S&P and Dow closed just below that line. I mean, it's nothing critical by itself. I mean, you want to see it moving above it. But you know, this is a key area, and it's a reminder that the stock market rally is still under pressure. We had a couple of good days,
right,
and that was nice, but that's also, we were so close, the rally was so close to going under.
Yeah.
I mean, it was really just sort of like there was all sorts of red lights flashing Thursday morning. So we came back from that, but still, this market rally is not doing great. We're still China trade news.
Yeah.
Today, and the trade talks are later this week. China's basically signaling, well, we're not going to do a big deal. We'll do a small deal, maybe buy some more, you know, farm goods. But so it'll be interesting to see how that plays out.
And really, you know, there was such a devastating move at the beginning of last week. You know, those 2 days of a bounce was almost like, you know, okay, you're a little bit oversold. You were kind of due.
Yeah.
So now it's a matter of, can we hold it? And you know, we did try and make some progress today, but it wasn't able to hold it. So that's going to be the test. But let's take a look at some individual names that were actually up today. And that was the thing. A lot of the individual stocks were looking much better at the at the middle of the day, and then kind of faded to the close. But RH was one that we were looking at, and that cleared a 3 weeks tight entry. So talk a little bit about the 3 weeks tight. Why is that something that might be a good place to initiate a position here instead of just adding to a position?
Yeah, normally because a 3 weeks tight, it's sort of like a little ledge. It's not really a base.
Right.
Which is why we normally say it's too short. So it's because a 3 weeks tight, it often can look better on a weekly chart, but you can see it here. It's basically when the stock closes within 1 to 1.5% of the prior week's close for 2 straight weeks. Well, it did that and moved above that. But the reason why we say, well, new people, you know, new investors can come in is that it's fairly close to a prior breakout. You can sort of see how it broke out a few weeks ago. So that's a situation where you can initiate a new position. The stock actually, despite some really strong growth and really big stock moves, it's actually a fairly low PE stock. But it's been doing very well in that regard. Sort of did pull back near the end of the day, though.
Yeah, and this is one that has very strong earnings. It's been really moving well. Volume wasn't quite that high. That was one of the concerns that we were looking at it earlier today. We did put this on Swing Trader. Volume was ended up just above average. So let's go ahead and move on to another stock that we were all talking about this morning. That so some arguments back and forth, some heated discussion. Nvidia. So this is an old leader from 2016. Almost had a tenfold move. Then it went down about 58% off its high as it corrected. But is this potentially a comeback here?
Well, yeah. I mean, when you have a stock rising up that much and coming back down, usually it doesn't come back, or at least not come back for a while.
Right.
Like, doesn't have a relatively quick back. This one does not in any way show the huge drop we've had. The stock is formed a base, some of that below the 200-day, but the last couple months are back above it. It sort of had a failed breakout previously. You could argue, that it has, it's right up towards a handle buy point, now within a consolidation. Backed off of that, it actually got some positive analyst comments today from RBC Capital saying, hey, it seems like the core businesses, PC gaming and data center chips,
right,
that demand was picking up. That'd be positive. You know, Nvidia was one of the first to show that suggests that the chips industry was going down. You know, there's hopes for a chip industry recovery. You see a lot of the chip gear makers rallying. Not too many of the chips. You know, would Nvidia be one? That might be, but it backed off of that buy point today.
Yes, and now this is one that had a stellar earnings growth record. Last few quarters have been not so great, but the estimates are going out forward that this might be a turnaround situation. So,
yeah.
But do keep in mind, again, it doesn't show up on that chart there, but this is still 25% off its 52-week high, 38% off of its all-time high. So it's a bottoming base. Last but not least, let's talk about ServiceNow. Now, a lot of software names were kind of showing a potential comeback. This also ended up for the day as it got back above its 50-day moving average line. Is it possible that software, which was leading for so much of last year, could make a comeback here?
Yeah, I mean, there's a few names that are already in buy range, like Proofpoint or DocuSign, which has been around there. But some of those were stocks that hadn't really been leading, and so these are sort of like. But ServiceNow, recovered from the 200-day, then the 50-day, and today it's sort of breaking a downtrend. You know, this is one of the first big 2019 winners that's coming back. But it's got a long way to go. It's just sort of like, hey, it's showing some signs of life. Maybe it can do that. There's a few others that are doing so. Needs to get up there. It's still, you can't generate the growth to still, justify. It's still high priced. How high priced it is because
of that run.
Because of that run, and these companies had big runs. The growth was tremendous. Now, not as much. The economy is slowing. I mean, it may be that they'll come up, and then we have earnings season in a few weeks, and then we'll start hearing from some of them. We'll decide whether or not the market says, yeah, these have another run in them. But it is something to watch for. It's like that at least it's coming on the edge of your radar screen.
Right. And what's interesting is that the computer software enterprise on our industry groups only fell to like maybe 47. So it had been at the top for quite a long time. It only fell to 47 because it's a 6-month kind of rating. And so because of how much it had gone up, they really didn't come off too much considering the run that they had. So, as you said, this one got support at its 200-day moving average line. So it wasn't a full-on breakdown.
Yeah, when you compare to Nvidia, which was a full-on breakdown, and the chips had full-on breakdown, some of those, this one not nearly so.
Yeah, okay. So that'll do it for us today. A couple things that you should be aware of that we have coming up. It's actually kind of a full week for us here. A lot of stuff going on. We have Open Access Week this entire week, and so this is a really great opportunity for you to check out some of the stuff that's normally behind our paywall. You get kind of access to the big picture, some of our premium content, and that's going to be going on October 7th through 13th. No credit card required. This is something for you to just really get a chance to kick the tires and check us out. We also have a webinar coming up tomorrow. This is going to be an exciting one. This is Scott O'Neill along with our Chief Content Officer, Chris Gessel, and they're going to be talking about 4 emotions that impact your investing. This is going to be really about getting down deep into the weeds of how you do your trading and that kind of emotional aspect that you need to consider. And then, of course, we have Allie's investing strategies at the NASDAQ that will be dropping tomorrow, and that's investors.com/investing strategies. You mentioned that she's going to be actually doing an interview with MongoDB, which is also in the software industry, so that kind of follows along with our discussion today. So
yeah, that was bouncing off the 200-day, trying to get back above a 50-day. So this is one of those former leaders trying to get back. So it'll be interesting to see what that person has to say.
Yeah, so definitely check that out tomorrow, and hopefully we will also see you back here tomorrow. Thanks a lot for watching.